Hello, Forex traders, and welcome back to another edition of the Forex Market Preview. I'm your host, your fearless leader into the currency markets, Charles Miles, professional Forex trader and trading coach here at TradeEmpowered.com. We help traders become independent and consistently profitable with our training and services, mentorship, and so on. Welcome if you're new to the Forex Market Preview email for the near 30,000 of you that get this email every Sunday, which notifies you that we have a video up on the channel on YouTube that you can go watch, which is the Forex Market Preview. And for the near almost, 72 or 73,000 subscribers on YouTube, thank you guys. Thank all of you who are subscribed there and each and every one of you on our email list. Guys, if you're on the YouTube channel and you've seen we posted a lot of new content recently from all of us here at Trade Empowered, myself, Charles, Keel Stokes, Jason Greystone, and so on. If you're not on the email list, though, you're missing out because there's lots of inside stuff that you might get the first scoop on, and actually maybe the only way that you know about something if you're on that email list. So make sure you subscribe so you can get access to the notification for this video and lots of other cool stuff, like I said, that you may not even know about if you're not on the list. So head on over to TradeEmpowered.com, and I'll put a link in the description below this video here on YouTube, and click on the Learn to Trade tab. You'll then get prompted, hey, you want to join our email list for either new free training. That'll also put you on our primary list so you guys know exactly what's going on over at Trade Empowered. All right, so let's go ahead and get into the charts. You can see my screen, hopefully. I've done this correctly and not messed it up. You guys are looking at Aussie Yen here on the 60-minute chart. And I'm going to go over just some trade ideas today, guys. Not too much on the training side of things. It's going to be more like, hey, here are the trades I'm looking at and what I'm going to be looking at for the remainder of this coming week. So here on Aussie Yen, we have two pattern formations. Now I want to see if you guys can pick them out. So I'll give you a couple seconds, and we'll see if you can see them. And they're both the same pattern formation. One is bearish, one is bullish. All right, so maybe you've had enough time to figure it out. Right here, we're going to have a cipher pattern, a bearish cipher pattern. If you guys don't know, cipher pattern being the pattern that was discovered by Darren here at Trade Empowered. We have our X to A to B, B to C, and then we're going to complete somewhere around the 786 level is our decompletion point. You can see we're really close to getting up there today. Not today, excuse me. This week, maybe we'll get up there. We're on the 60-minute chart, guys, so maybe a little bit more active in terms of the trade ideas here. But we can definitely get up there this week. You'd be looking to sell right here at the 786. Boom, right there. Stops will go above X, somewhere up here, maybe 10, 15, 20 pips, or maybe you use a different method for that. And then you'd be looking at targets here. Let me get my Fibonacci retracement out. From the C to D leg is how we draw our targets, and we'd be looking at 3 right there for target 1 and target 2 at the 618. Now if you hit target 2, stops would roll to break even, which would look something like this, like that. And then you'd be waiting for the balance of the position to trade a second target. Now, you, of course, don't have to trade two targets, but as you've heard us say before, you'll probably make more money if you trade multiple positions and scale out and have multiple targets. So that's what we're looking at here with the bearish cipher pattern. Now, let's go ahead and delete all this stuff. Apologize for my keyboard clicking, but gotta get it deleted here. So, assuming we get that, there's another bullish pattern, a cipher pattern. Maybe you guys already see it, which is right here. Go from this leg up. We'll be looking down at the 786. I'll draw this out for you. X to A to B, B to C, and then C to D. Down here at the 786 at 76.75s. Same process, guys. We'll go ahead and just delete this retracement there. Grab my retracement tool again, and we're looking for profits like this. I'm going to be going at the 382, target 1, and the 618 right there for target 2. Again, stops got to go below X, somewhere down in this area. And then if you hit target 1, of course, stops move to break even, something like that. All right, so those are the patterns that we'd be looking at here on Aussie yen. I'm gonna go ahead and delete this stuff, guys. Now, the nice thing is, imagine if you didn't have to do all that. Well, guess what? You don't. This is something I use every single day, Constellation. If you're not familiar, it's an advanced pattern formation recognition software indicator that's available for NinjaTrader and MetaTrader. I'm just gonna go ahead and turn on these patterns here, Cypher and Gartley, because we're going to look at some Gartley patterns later. And basically, guys, I don't feel like drawing it in because I got somewhere to be. So, boom. Look at that. So you see the triangles I drew. Just delete those. And you'll notice Constellation is doing all the hard work and heavy lifting for me. I don't have to really do much of anything. There it is. Pretty nice, huh? Again, real-time advanced pattern formation recognition. All you got to do is place it on the chart. There's some settings that you can configure, and then there they are. All you have to worry about is waiting for the entry to happen, placing your orders, and managing the trade. It really saves me a whole lot of time in terms of real-time analysis. You guys have probably seen this before, but I know some of you are new and maybe have never heard of it or never seen it, but that's what it does. Pretty slick, saves me a whole bunch of time in my daily trading. So moving on, let's check out Swiss yen here on the 60-minute as well. We got a bearish trend right here, but we do have a bearish cipher formation. You'll notice cipher pattern is very unique, guys. It actually breaks the A point or A leg point and creates C. It's a unique pattern. The other ones don't do that. They're very different in terms of their X, A, B, and then C. So we'll go ahead and take a look at this one here. So again, oops, map retracement. There it is. We have the decompletion point there at 104.27s. Target 1 at 382 at 103.95s, target 2 at 103.75s. And that, of course, implies that we actually get a move from here up into here. That may not happen. I have no idea. All I know is that when it does get up there, the likelihood that I could have a profitable trade here is very high, right? So a lot of people like to trade this. I'm going to go ahead and label out the letters for you here. X is here. A is here. B is here. C is there. That's a V. C. And then, of course, D up here. Right, what a lot of people like to do is trade this thing right here. Now, look where the market is at right now, or even down here. Well, Charles, if you know that the pattern's going to complete at D, why don't you just trade this aggressive C trade? Well, the problem is I don't know that it's going to complete at D. But if it does, then I know that I have a high probability of being a profitable trade. You see the difference? I don't know that until it gets up there. So now if you decided to trade the C leg or something like that, you got to have another reason, guys. You got to be trading structure or some other method. Don't just go trading the C leg of any pattern for that matter, the aggressive C point or what have you, just because you think the pattern's going to form. It may form, but it may not. When it does form, that's when the high probability trade exists, not before, unless you have some other reason, of course. All right, so that's the pattern formation there. Cipher on Swiss yen, a bearish pattern. Let's head on over to New Zealand yen. A lot of yen pairs today. Fun. So we've got two patterns here. You'll notice the Gartley pattern down here in purple. And we're bottoming out here. And what may happen, we can come down in here, fill along the Gartley, and may even push all the way up into this larger cipher pattern formation with short decompletion at 74.46. That may happen, that may not, but it is neat to see these things kind of form together. And typically, guys, that's what happens, because when you're seeing these patterns, you're in consolidation, right? So that's when they're occurring, and you see lots of them because they all occur inside of consolidation periods. When you're trying to trade a trend strategy and you're getting, eaten alive, and you're having a drawdown or something like that, guess what? You're probably in consolidation on the time frame that you're on. And that's when advanced pattern formations appear. So, which is typically about 70% of the time. So in most cases, really, if you're trading patterns, you're going to be trading more frequently. And when you do, when you are winning, trend trading would not be doing well in theory. And then when it's not going well with patterns, typically the market's trending. A lot of patterns are getting, busted out and they're being broken through. You might get filled and then it just plows through your stop loss past X. And that's typically how it happens in a trending market. But the other thing is, like we talked about the aggressive C, I don't know that the pattern's getting up to D, right? Well, the same thing with my trading. I don't know when the consolidation strategy is going to be profitable, when the consolidation happens, or when the trend's going to happen. And typically what you'll find you might be doing is, okay, I'm in a trend strategy and then it's not working. So let me switch to a consolidation strategy, and then that doesn't work because the market now moves back into trend. All right, so the problem is you don't know when it's going to change, which is why we say, hey, trade the strategy all the time. Don't change the rules. Don't change when and where you trade it. Just keep trading it because it's tested. You know that it makes you money long term. The problem is you don't know when the conditions are going to be. So you wait until they happen, but you just keep trading no matter what. And when they happen, guess what? You make money. All right, so that's pretty much how it works. You don't want to flip-flop around on strategies, guys. Like I said, you'll switch to one, and then the other one that you were doing that you left will be profitable, and vice versa. So it's really no way to go. You want to be consistent with your trading strategy. All right, so let's take a look at some structure trades. Let's go over to New Zealand Swiss on the 240-minute chart. A couple things here. Let me see if I can remember what in the world it was I was going to talk about here. I'll get it in a minute. Yes. So we have the market here. Now, what happened recently on this 240-minute chart? And I was on the 60, guys, but it's more easy to see here on the 240. So we have this high point looking left, structure leaves clues back here, right? And we had this break above, close above. Let me kind of zoom in so you can see it better. Right there, right? We closed above that point clearly. We have a new structure high. And we've already kind of been in an uptrend, at least this tiny one, right? The most recent move though was down. It was a correction off of a recent trend here, but most recently the trend has been down, and now we're rallying up. Now we may have a continuation of the original move, this longer one, based on this new structure high here, and the market's kind of retesting back down into this area where it was, and we also have a rising wedge, if you're familiar with that pattern, or a rising triangle, whatever you want to call it, right here. So you can see it's rising and it's forming this kind of triangle pattern, kind of like a triangle, more like a wedge. And then what can happen here, guys, is since that's happening, we also have a new structure high. We have this rising wedge. It's a decent assumption to have that market could just press right back up into here, or at the very least come back up into here. All right, and then we look left, boom, some structure right there. So what you could look at on with this trade is that you'd have target one here at this location, right? Target two up here at the more higher structure point. And then what you can do for your risk reward, you can get yourself, say, entered here at market at the open. Let's see, the lows here were 69.20, 69.20s or so. Get down below there, we got the 6,900 even handle. So you'd probably want to be, we came out of there already, so I don't know that we'll come back into it. Likely not, but who knows? Let's say you were at about 69.13s or so. So if I copy that box that I just made, and I put it up here, oops, that's not a copy. Let's try that again. Delete that one. There we go. And move it up here. We could probably get a little bit more on this if we're trying to get at least a 1-to-1 at the beginning, so I can stretch this out to our target 1, and that'll give us a little more stop wiggle room here on the stop placement. There we go. You could look at stops at around 68, 87s, 86s, and that would actually be under the even handle. Now we are near some structure here looking left, but again, we've already come out of there, and we're actually pressing up, and we have a new structure high. So the market's telling me that it wants to go higher. Now, will it? I don't know, but that's what it's signaling. So we have about a 1-to-1 risk reward there, and then we move on to our second target, which could be up here. A little bit less than a 1 and to 2 there, so a little bit less than that, but still a great opportunity for a trade there. If you're this style of trader, I've just wanted to break it down and show you what we came into the even handled area. We had a new structure high there at the blue candle, and we have this rising wedge and some structure areas that you could look at for targets. So trade what you will, just wanted to point this out. So let's head on over now to New Zealand dollar, also here on the 4-hour. Now if we take a look at this trade, very similar concept. So I actually see that we had a head and shoulders pattern here, but you'll notice that we've closed below some prior structure right there. Boom. Let me zoom that in. You guys can see the white line. We've broken closed below there. Actually like this trade a little bit better than the other one in terms of where things are at. So we just zoom back out a bit. So our most recent move was up, right? And before that was down. So we've been kind of chopping around in between these two yellow lines for kind of a while. So since we've had this move down now with this new structure break, to me this is signaling, again, a shift in the current from the current trend that was up, right? And you could say, well, we didn't ever get above the prior swing highs of this downtrend, so we're still in a downtrend. Okay, fine. It depends which move you're going to look at in terms of your perspective. Overall, though, yes, we'd be trend continuing here based on the first move, but we could see we're stuck in between this boxed area. It's kind of hard to define trend except by the most recent moves that you see. So in any case, what we're looking for here is a shift off of the up move, right, and looking to go down. So I like this trade. Let me had a Fibonacci. Yeah, I had some Fibonacci going on here, I think, on this trade. Let me see here. Bring in my Fibonacci tool. We've come down into a 382 most recently. But probably what I'd like to see happen is, since we did do that, we've just had the structure break, is be a little more patient with this. Take from the swing high down to the swing low here. I'm just going to delete this larger Fibonacci. And wait for the market to come back like up into the 382. Or somewhere in there, because we've had this structure break now, but the market could just breathe up a bit, gather itself, and then, fall off a cliff. And I want to be a little bit more patient in terms of the risk to reward on the trade. However, if we lay that out, what I'd be looking to do based on being a little bit more patient with this one is putting stops above this swing high here. So at 72.19s, let's see, 72, and 29s would be 10. About 20 pips or so up here, 72.39s. All right, and then what we look to do is actually try and get filled at the 382 level, right? Drop that in. So if we measure this out, just take my little box tool here. So there's my risk. There's my risk right there. Entries to stops. Trying to take this trade short, and I measure it out. Where are we looking here to get a 1-to-1 as a minimum? Well, actually, where I'd be looking to take targets off would not be this most recent area, but actually looking left back here, you guys can see this structure area right there. See that right there. So that's kind of where I'd be looking to actually get first targets off at. The most recent structure looking left, it also lines up well into this area right here. So kind of in this zone. It's more of a zone, guys, because we got this right here, where the market was messing around right there. And if we drag the box all the way left, we kind of have this, zoned area where the market chopped around here. And then we tested off of it. It was resistance. We came back up with resistance again, and then we broke through it. So, it's kind of this zoned area. So you could look for targets there for sure if you wanted to. You could even put them in the middle of this boxed area. That could be an option too. Okay. Now, if we look at that for target one, let me go ahead and draw out my arrows here. So target one would be there. Target two, though, we're looking left, guys. The only really relevant stuff is down into this area back here, about a 70.33s or so, and maybe down even into the yellow line, which we've tested multiple times. Again, we're in this range. These lines are probably from the daily chart that I've had up for a while. So if we look at that again, target two, guys, could even be down into this area. And you know what? I mean, looking at that, if you look left, right? Look left from there. Over here, structure, right? The market respected this level multiple times. See that? So you could even look for target twos down into there. Either way, with either spot you decide to take, still looking pretty good on a trade like this. Again, I'd be more patient, wait for the market to come back and retrace up into previous structure. Right there at about the 382 retracement. If you look left at the 382, got a little bit of structure right there. It's kind of lining up perfectly. So you see, guys, Fibonacci and structure can really help. If you're trying to find structure levels, I'm not quite sure where it is, draw Fibonacci on and say, hey, look, the retracement comes right into some structure area. That looks like a good place for me to, try to get entered. And then it actually improves your risk reward, right? Because you're waiting until you get up into here to have your stops above these swing highs. Now, you could enter right now, and then you'd have your stops way up there, right? So you see how being a little bit more patient can get you some better risk reward on the trade. And typically, guys, market will break structure, retrace up anyway, and it could just plow through. But typically what happens is it retraces back up or down, whichever way you're going, back into some previous structure before continuing on. That's a common thing in the market. Now, just look at anything. Just look at the market and you'll be able to see that, right? Just look at this. We went up, came back down into previous structure, support, looking left, boom, right? Did it again, broke through, came back down, previous support, look left, there it is. You see how that happens? So it just happens all the time. So frequently, that's kind of where you're going to want to lie in terms of being patient with a trade like this. So guys, I hope that gives you some ideas about what's in the market here for this week. I'll be definitely looking at some of these things in the war room this week in the syndicate. Please join me. I'll put a link here in the description. You'll probably see a little button here across the video to join syndicate for just $1, guys. $1, best dollar you'll ever spend for 30 days for your trial. It's $49 a month after that. Auto bills, so if you want to stay, just don't do anything, and you'll be able to stay in the program. And you can cancel anytime. It's no problem. Just contact us and we'll take care of it. I tell you guys, best dollar you ever spend, 30 days. I don't think you can get much better value than that, what you'll find in the syndicate with myself and Akil. So I'll see you guys in there. Again, if you're not on the email list, make sure you sign up so you get notified about unique events and other things happening at Trade Empowered that don't necessarily go out to the public or on the YouTube page. So head on over to tradeempowered.com, click on the Learn to Trade tab, wait to be prompted to sign up, and then go ahead and do that. And guys, thank you all for being here this weekend. I'll see you in the markets. Always be great and be professional traders. I see you guys next week.